With today's global stock market sell-off, you may be worried about your 401k or your pension. With reason, Gerri Willis is with me now. So, Gerri, there's this new survey that more than half of Americans cannot afford to retire. Is that right?
That's right. They can't afford basic things. Like, what are we talking about here? We're talking about food. We're talking about housing. We're talking about health care. This is really concerning to a lot of Americans. I want you to hear what John Sweeney, who runs Fidelity's retirement business, had to say about this study.
55% of Americans who are not on track today to cover their essential expenses. It's important that they take action. People are thinking about Social Security as a component of their income in retirement, but really they're going to have to make changes to their current lifestyle, whether that's saving more or planning to work longer.
So people are going to have to make changes to their lifestyle, but I want to show you savings rates. Different generations, the boomers saving at a 9.7% rate, Gen Xers 8.2%, millennials 7.5%. Look at that. So the people closest to retirement, it makes sense, are saving more than other folks. I was also interested in Fidelity's report on what age people think they're going to retire at. Can you guess? What do they think?
They think probably poor people now, like 75 or 80. Most people tell me I'm going to work till I'm dead, right?
Well, they say 72 is the number they say. And remember when we used to retire at 62?
Right, and I noticed, Gerri, with your reporting, all of those numbers are less than the 10% that most financial advisors would tell you, too, which shows you, just underlines your point on how strapped people are. Bob Rice is keeping us company here as well. So, Bob, with this market turbulence, for people to plan of any age, it's just more daunting, right?
Yeah, it's a lot more daunting, but you have to remember one of the important rules about comfortable retirement is start with don't lose what you already have. And so I think that there's some need.
Basic, but sometimes overlooked, right?
Well, exactly. You know, we got caught up in the go-go years of the last several years, and people think it's going to always grow to the sky. And as we've learned since the beginning of the year, that's not necessarily true.
All right, so talk about protection, portfolio protection. What should we do?
Well, one of the most underappreciated investments is cash. And people kind of scoff at you when you say that. But when the market is fully valued, doesn't have a long way to run, which this one probably doesn't, cash is an interesting investment because it's not just defensive, it's offensive. If the market falls significantly, continues to fall, you can buy in at much lower prices. And that's how the real smart money makes money.
What do you think, Gerri?
Well, I really respect Bob, but I got to disagree with you here. I don't want to be holding on to cash. I want to be buying things that I think are on sale right now. I'm already shopping and looking for things.
Apple's under 100, right?
That's right. So I think a lot of things out there, even companies that are well-respected, well-regarded, high dividends out there on sale, it's time to start looking.
I do agree it's time to start looking. However, I wouldn't say they're bargains just yet. And I would say that another way in that's interesting and that splits the divide here, that allows you to have one foot in both camps, right? Yeah, I'm trying to be diplomatic, is alternative mutual funds. So these are funds that have built-in hedging strategies. You're in a mutual fund, you've got your foot in the game, but also you have built-in downside protection. And that's a really interesting way to play things right now.
And Wilshire is one website which makes really no money from selling. It is just a resource. So if you're not sure if there's one for you, it's sort of like the Morning Star, right?
Yeah, for alternatives. Wilshire has a really great resource for people who want to look for these kinds of funds. There are many of them out there, and many of them are actually up this year, not down.
Well, and before I go, I just want to say really quickly, look, this is not the time to sell and get out. This is the mistake that small investors make.
I was just going to say, that's the emotional response, right?
That's right. So if you do that, you have locked in these low prices.
All right. Well, thank you both.